Yeah, so good day, guys. So this is a continuation of our how to trade series. So today's series, guys, just stick around and focus. So because we're talking about psychology of trading and trading risk management and how I go about my own trading. So we'll dive into the trade straight on. So risk management. Risk management for me is divided into your capital that you need to trade. Now, if you are trading prop firm, your risk parameter is quite different from the one you choose to know. You understand? So let's say for example now you're new into profit now and they give you like a $10,000 account now. You understand? You don't own the whole 10,000. You understand? Your capital is just 10% of that 10,000, which is 1,000. Understand? So the company gives you 1,000 to trade. So now your risk parameter should be divided within that 1,000. Hope you understand what I'm trying to pass across. Now, we know that we have 1,000 now, not 10,000 to work with. So how much of that 1,000 are we going to be risking per trade? You understand? So it depends on how your tolerance is. Mine, if I'm doing a challenge, I like keeping account for maximum of 2 weeks. You understand? I like keeping my account for maximum of 2 weeks. If I'm doing my challenges, so me 2 weeks is enough for me to either fail or pass that account because that's when I have that eager to trade the account. Why, if it's a life account, the life expectancy of that trading capital is a month. You understand? So by so doing, I divide my 1,000, which is the original capital, not 10,000. If you have a $10,000 profit account, I divide my 1,000 into 20 places. You understand? Into 20. You understand? And if you do that, you discover that you should be risking $50 per day. You understand? So if you are taking multiple positions, if you are taking just a single position, no matter how you are doing it, you shouldn't go above $50 per day. You understand? So to lose that funded account, you need to lose like straight 20 times. Trading every single day, you lose straight 20 times for a full month for you to blow your funded account. And if you think that way, that is nearly impossible to do. You can't lose every day for straight 1 month. You understand? Even though you are even profitable for just 5 trades, you'll be back at break even with some change to prove for it. With some change, if you are doing a risk to reward of 1:3, you understand? Or 1:2, you'll be at break even. If you are doing 1:2, or if you are doing 1:3, we have an extra with you to work with. You understand? So that is the first stage of the risk management. And if you do your money this way, you discover that psychology follows suit. You understand? If you dive into this, if you want to do anything you want to do, as far as you know that you're not risking, you're not losing more than $5 in a day, any losses you are choosing to trade, anyhow you are to choose to trade, but you know your maximum loss per that day shouldn't be above $50. What you do is you have your brain in check, you have your psychology in check, you already know how much you can lose. Now it's left for you to discover how much you can make. Are you with me? You already know how much you can lose. Now it's left for you to discover how much you can really make going forward. So that's how you trade with prop firm, you trade your personal capital, you trade whatever capital you have. You understand? So the same thing applies. So the same thing applies to the funding challenge. Like me now, I risk 1% per day if I'm having a prop firm funding challenge. You understand? So I have 2 weeks to lose straight to blow the account. You understand? So that's how the risk parameter goes, and it's impossible for you to trade your rules, your regulation, your playbook, your system continuously for 2 weeks and lose that profit account. You understand? Hope you get. You understand? So that's just the psychology and the mathematical part to back up what I'm about to show you on the screen now. So let's dive into the screen. So you can see this is the 30 minutes time frame on AUD, USD. You can use whatever trading asset you choose to go with. You understand? But me, I'm using AUD, USD. So now this is the secret to this part of the whole trading. You understand? So no, I want to teach you how to set your stop losses. You understand? How to set your stop losses. So if you are a day trader, if you are a scalper, if you are a swing trader, you know the only thing you just do you just need to do is apply it to your time frame, because all time frames are not the same. But me, I trade day trading most of the time, so I'm using the 30 minutes time frame, like to give an example. So if you're a swing trader, you should be doing this example on the 1 hour and the 4 hour time frame. You understand? If you're a super swing trader, you know the 4 hour time frame. If you're into day trader, you know 30 minutes is for you or 15 minutes is for you. If you're a scalper, you know you should go down to the 5 minutes or the 1 minute to do the same exercise. So it's the same thing over board. You understand? So you can see the chart I have now on this chart. You can see the chart is just plain white. The only thing is just green and red. The reason why I set my chart like this, because the colors does not really mean anything. Red doesn't really mean that your trade is going down. Green doesn't mean your trade is going up. It's just how the market flows over time. You understand? So that's how the whole thing goes. You understand? So first of all, let me delete everything on my screen. Here, let me move all the drawings and everything. Let's start from base. Now, we all know how the market moves. We all know how market tends to trend. You understand? We all know how market trends. So if you don't know how to trade, go and watch my previous video where I show you guys how to enter trades. You understand? This video is for how to manage trades and manage your risk management. So I won't be going through all that for now. So let's just start the whole process from here, from down below, how to set your stop loss. You get how to set your stop loss now. So if you are starting this process from down below now, you can see me, I like marking up my chart, knowing the base. Like now, here now, for example, now this was in the downtrend, so here signifies where the market should break to continue downwards. You understand? And if we clone this, make a clone of it now. You understand? So this here at the top level is the resistance level that forced the price down to break this support here to give this new low. You understand? So since we already have this in play, we already know what's going on. You understand? So we already know what's going on now. So there are two things that can happen here. You see that market comes here, reject this area and continue downwards, which it didn't do in this case. The thing just went up and continued going upwards. Now, this is where the risk management comes into play. You understand? So you can see we have a new high here, but the high is not really convincing. You understand? So it is done to go with this high. You understand? I explained that in the last video. If you didn't watch the last video, go and check out this how to trade on the playlist. You'll see the last video there. You understand? So this high is not really convincing enough. You understand? So you can see this thing coming back down, and it could have easily went down and broken this area here, because this is not convincing enough. You understand? So to have a very convincing breakout, you need a very convincing candle break and confirmation above this resistance area, which is displayed here. You understand? Since you have a new breakout, and the breakout now is confirmed that okay, this market has switched momentum on this time frame. You understand? Now it's very easy to target your next level, since there have been a change of the internal structure. Now if you look at the bigger range will be from here, from this area to this area now. So you should be targeting this area, these highs here, to test these highs. You understand? Which should give you 1:2 and 1:3, depending on your risk tolerance and the risk parameter you use here. You use at this area now. So now we automatically, you know, like I told you before, I trade only breakout and pullback. Now this was the initial resistance area. You understand? And this is where I'm looking for price to come down and retest this area before moving up. Hope you understand what I'm trying to say. Now, if you watch the chart enough, you can see we had our breakout, then we had a good market retesting, rejecting this area. You can see the small rejection here. And normally I won't just enter rejection. I need to see something moving up. You understand? So we have the next candle didn't close below, the next candle closed up. You understand? And this shows me that price is willing to move up in my direction. So what I do now is just take my long position, I place it here. Then my target originally is here. You understand? Then my stop loss is below. My stop loss is below 3 places. I usually like my stop loss being below 3 places or at least 2 places. For example, now here is the support area. Two, this two is the support area, and this is retesting this area. So I would like my stop loss should be below at least this area here to be more convincing that price won't just come, because price could have basically come this way and do a stop loss hunt and continue. You understand? That's why I like my stop loss being a very, very good area to target in on 1:2 or whatever you want to target. So let's use our 10 pip stop loss. You can see this one is a 10 pip stop loss. Then our stop loss is below here. Is below here. You understand? So if we were to enter at this level before, then our stop loss would be below here, then below this area here. You understand? We'll be using more stop loss to like now to below this area, so we know that price covers one, this is one, this is two. You understand? This two for us, you understand? Because we entered at this other candle coming to test without seeing any reaction on this zone. But me, I like seeing reaction a lot, and the maximum stop loss I like using on currency pair is 15. So if the thing is above 15, I'm not really interested because it won't give me enough reward that I'll be looking for. Understand? So we go for a 10 pips. Understand? We enter at this candle close here. We enter at this candle close here. Understand? So we have 10 pips then. Our profit target area is here. You understand? So you can see the trade. We have a clean 1:3 here. Then we just let the trade ride. Just leave it, let the trade ride. You understand? So we have at the back of our mind that our risk parameter, why we put our stop loss here, why we put our stop loss here is because we have confirmation that price has pulled back to this area, that's rejected this area, that's formed a very good candle here, you understand, indicating that it's moving upward to this our target region. And now this is where people get it wrong. You understand? Once they see, this is where people get it wrong a lot. You understand? So once they see their trade is going into profit, when they see their trade is going into profit, they quickly put their trade in break even. You understand? You put your break in break even. In your trading, in your trading book, you understand? Break even shouldn't be taken if you plan on trading a very serious and a long time. You understand? If you're putting your price target at break even prematurely, it just shows that you're not ready enough to accept this risk here. If you have done your first homework, like I told you before, like you're risking the normal $50, and you know how we got to that $50, we calculated that part before, and you've gotten that $50 now, and you know that this $50 now is what you are willing to lose a day, because me, I trade with just one trade a day. You understand? I trade just one trade a day. If I plan on taking more than one trade a day, I will review my risk parameter, then I will make sure that I have more capital and I'm willing to distribute more percentage of my account, because the maximum I can reach on the profit account is 0.05, which logically is 5% of your account, because the profit account they only give you 10% of that your account. Then if you reach 0.05, that is automatically 5% of the account. So you shouldn't be calculating your trades with your perceived fake balance. You calculate your trade with the original trade balance, which is 10% of the capital you are being given. You understand? So you can see immediately we got into profit here. You can see this trade in this second candle here. It came down to test this area again before pushing up. And most people, what they do is that once they see this candle close like this, they will quickly put their trade at break even. Then this has a very, very like 60% of time we will hit every single time, and then you'll be struggling when you see this one going up. Now you'll be struggling to enter the trade somewhere around here again. Then you enter the trade around here again, then the trade will come back again, will still hit your stop loss, because your stop loss will be somewhere around there. Still come, will hit your stop loss again before going up. And if you continue that trades are going into your direction, but you are not seeing the profit. You understand? So this is a very, very short video. This is how to calculate your risk to reward. You understand? First of all, you understand the structure, how to trade market structure. You show what's that for the previous video. You check the link in the description. The video will be there for you guys. Then you work your way towards how to place your stop loss. Your stop loss is a reflection of how much you are willing to lose per day or per trade of that account. You understand? If you are willing to take like 3 positions a day, then you divide your $50 into 3 parts. You understand? You divide your $3 into 3 parts. You understand? So you risk the part you know you're ready to trade. But me mentally, I can't take more than 1 loss a day. So if I take more than 1 loss, I'm out. And if I take 1:3 a day, Christmas came early, I'm out. You understand? Because I'm covered for the rest 3 days. Hope you understand what I'm trying to say. So that's just that for this. If you like video like this and you want me to continue making good videos like, because we're just getting, this is just the surface area. Now next video I'll show you guys how to create the full system. There's a full system, how to combine what market structure, psychology, you understand, risk management, everything, and a lot more. I'll be teaching you guys how to combine the two and make it into a system and see the chart the way I see the chart. You understand? Having more clues on how to go about your day-to-day trading. You understand? So if you like more videos, leave us a subscribe, like, share the video, comment if you want us to do. You understand? We'll make sure we get this video to you. See you next time, guys. Take care. Enjoy.